enterprises. Their commercial business is on fire, up 71%, I think, in revenue. Now, a lot of good news has moved into this stock in the last year. It's gone from 10 to 100 plus. And so according to our valuation, the rate of return expectation accordingly has come down over the next 5 years. It is still in the top 10. But if we're wrong, how are we wrong? It is that Europe actually starts moving more aggressively into AI. Now, Palantir is on record, Alex Karp, saying, Europe has been hopeless in this regard. But in their defense, their new defense spending, AI is featuring prominently, and Palantir with Maven is helping. So we may see an upside surprise there. And as I said, the sense of urgency that we're seeing out there is provocative. And I think it's going to mean it'll be a huge boon to economic growth and to much lower than expected inflation. And I think that's where we differ from a lot of investors out there.
Kathy, on the AI front, what do you think of the Google news earlier this week that we learned sort of from Eddie Q just about folks using sort of classic Google, the blue link economy, and to the extent you think that all of the big large language models take some kind of market share from Google?
Well, we've been calling for that for quite some time, ever since ChatGPT. So it's not surprising to us. Google came back and said, yeah, but those searches are not the commercial ones. They're for research. They're just asking simple questions. We disagree. Nick Gruss and our team on consumer AI, they're envisioning a world where personal assistants are going to be doing a lot of the walking for us or the searching for us throughout the internet, and will not be using Google as an intermediary. No surprise. And it's interesting. What we have been fighting over the last 4 years are three headwinds. One of them has been this concentration in the market towards the Mag 6. If we're right on truly disruptive innovation, and AI certainly is that, it's going to disrupt the traditional world order, some of which includes the Mag 6. And then the other two headwinds quickly we've been fighting that are changing are interest rates. We think they're going to come down. And valuations. Our valuations, as everybody noted, after 2020, very high. According to a metric, enterprise value to EBITDA adjusted, we've worked with the S&P, we've moved down to close to a market multiple in terms of disruptive innovation, truly disruptive innovation. So pretty excited about that as well.
Kathy, I want to thank you. Have a great weekend.
Well, that's entertaining. Good old Kathy Wood. I think she's the same age as the Pope, by the way. But anyway, Kathy Wood here on the upside surprise for Palantir being European revenue. Still got to make a Palantir video, but it's interesting. I was going to talk about Europe in that. Europe, one of the things I was going to say is Europe has a tendency of being a little bit behind. Not unusual, sometimes when you go to Europe just to visit, it almost feels like you're stepping back sometimes into some of the customs and cultures or moves of the 1970s or 80s, as we always joke when we go. But not everything, of course. But anyway, so Donnie T, good old Donnie T, has got suggests that maybe it's not a reduction to 50% tariffs that would be good for China, down from 145. Maybe 80% tariffs are better. I don't know that people seem to understand that tariffs are bad. People are like, no, well, if tariffs are bad, why do other people use them? Well, all levels, tariffs are a form of protectionism. They're a tax increase. They generate deadweight loss. Let's say the world has a trade weighted average of 2%, let's just say, of tariffs against each other. I mean, really, if Trump wants to take a fight fire with fire strategy and eventually get us to free trade, hey, maybe it's a means to an end. But unfortunately, I really think he's convinced that tariffs are a form of revenue and permanent revenue. And if you use tariffs as a form of permanent revenue, you create a permanent form of deadweight loss, a permanent form of economic inefficiency. And that's what depresses me. But what are you going to do, eh? It is what it is. So anyway, the Qs, the good old Qs, up about 35 basis points. We've got Canada. Canada adds 7,400 jobs. Unemployment jumps to 6.9. That seems Canadian employment seems a little higher there. But we're going to take a peek at this. Let's see here. Economic. Economic. All right, let me pull up Canada here. Canada. All right, so Canada. Well, we had a survey of just 5,000, and the unemployment rate was surveyed at 6.8. It's now at 6.9 in Canada. And the prior unemployment or jobless read there was negative 32,000. Unemployment rate's been climbing in Canada. We've been coming up here from about 4.8 in the middle of 2022, basically 2 percentage points now in Canada. Very interesting. Chance talks business. Yeah, there is this idea that Donald Trump, again, is using them as negotiations, which, like I said, if there are means to free trade, hey, even freer trade than what we had before, maybe that makes sense. But if they, if he becomes addicted to this idea of tariff revenue, or like what we heard with the London deal or the UK deal, that, hey, 10% tariffs are on like the lowest will go. Well, then what you've done is you've 5x'd the base rate of tariffs globally, and I think that's a pretty significant mistake. And it'll take a very long time for that'll become apparent. I'd say probably August is really when things become a little bit more poopy. So let's see how is the 210 doing today. Oh yeah, we did have a 210 spike. You're right, everything college football. That's quite interesting because yesterday we actually saw the 210 spread. What's up, David? Missed you too. So we did actually see the 210 spread yesterday get down to about 47 bip, dudes. The one who was says nothing is free, absolutely nothing. Let me understand this for a moment. Okay, hold on a second. So we have an understanding of what you're saying. Okay, so the one who was says, Kevin, hold on, wait for this. Kevin says, tariffs, permanent tariffs generate dead weight loss as an economically inefficient way to raise revenues. Okay, the one who was says nothing is free. The one who was spits straight up into the air, responding zero to what I said, or with any logic. There's no response. So I made an argument, right? I made an argument that tariffs generate deadweight loss as an economically inefficient way to raise revenues. And then your response is nothing is free. Well, this is a logical fallacy because you haven't actually responded to any of the argument that I made, because there are things that are free. So factually and logically, what you're saying is wrong. The air we breathe is free, as an example. Sunlight is free, as an example. So I don't really know what you're getting at. Kind of interesting. So, okay, let's see here. Zelensky says Ukraine will host a meeting of leaders of Coalition of the Willing this Saturday. Ooh, same day as the China negotiations. Anyway, so where we were was this, not that car ad. Here you go. The 210 spread did fall under 50 over the evening, and it did pop back up over 50 just this morning here. Yeah, Trade Desk did destroy earnings, mind you. Now, Trade Desk I've been talking about for a couple of weeks now because I've been saying this one is primed for an explosion. It's rounding out at the bottom. It's fundamentally low. It's technically low. We even said it yesterday. So congratulations if anybody had a move there on Trade Desk. Let's listen to Kevin Hazlitt.
Obviously not one of our largest trading partners,
Right.
but this perhaps provides a framework for what we might anticipate to see in some other trade deals as well.
Tom, you actually think we're going to bring manufacturing back to America? Who like mind reprogrammed you to think that we're going to become manufacturing competitive?
With respect to UK goods, but with respectful exceptions like the quotas for autos. And I think in our view, that makes it so that there's a lot more revenue coming in that the U.S. can use to make American workers and American firms more competitive. And the other thing is that we put a high priority on advantaging American farmers. And so if you look at this deal, go look at the press release that the beef producers put out as soon as the deal was signed. We know that it's been a tough time for farmers in the U.S. And a big reason is that they've been treated so poorly by our trading partners. And getting the U.K., which has been a country that's been pretty reluctant to let our beef and other products in, come to the table and open up their markets to U.S. farmers is a big, big win.
We did hear, though, from the policymaking group for the United States automakers that they were disappointed by this news to hear that UK autos.
Someone says, no, Kevin, you said Netflix killed Trade Desk. No, you dumbass. I said Netflix contributed to Trade Desk dropping 55%. But on a technical basis, it looks like it has bottomed. And I said on a fundamental basis, it's very cheap. The Netflix problem is still a risk. Other platforms like Disney can in-platform their own ad spend. If you watch my literal live stream yesterday and you pay attention to what I say, you won't misquote me. Thank you very much.
And the capital spending data in the first quarter, where we saw a 20% boom in equipment investment, you can see that it's working. But yes, there's going to be some adjustment. That's the purpose of the policy.
The cars that are made in the UK can come in without any parts made in the country with a lower tariff.
That would be a bigger concern on an economic front if there weren't a cap on how many cars were coming in. So it's just capped at about what was coming in before, so that U.S. producers don't have to worry that they're suddenly going to lose their market compared to what's been happening in the past.
What impact will this have on the greater U.S. economy to have a trade deal like this in place?
I think it's going to be enormous positive because now people see what the next deals are going to look like. And, congrats to Secretary Lutnick and Jameson Greer, who are leading this effort. And I can tell you that I've been briefed on about 24 other deals that are this close to being resolved. And what that's going to do is it's going to be very settling for markets because they're going to understand what the rules are. They're going to see that the rules advantage American producers and American workers and aren't horribly disruptive, like some of the Wall Street firms have been saying they would be if you look back a month or two.
Kevin, how much money should the Treasury expect to be bringing in annually as a function of tariffs once these deals are remedied or negotiated?
The problem with that question, it's a really smart question. And the problem with that question is it depends on what happens with the negotiations. It depends what happens with the negotiations with the Chinese in Geneva this weekend. And so if I put a number out, then in some sense, it's upending the negotiation because we're saying, oh, well, that's what the U.S. position is. I can say that I spoke as they were getting on the plane with Jameson and Secretary Bessent last night, wishing them Godspeed. And, everything that's been going on with the meeting in Switzerland is very promising to us. We're seeing extreme respect, treating both sides with respect. We're seeing collegiality and also sketches of positive developments. And so I think that as we move forward and remove, hopefully, uncertainty on China and get deals like the UK, then people understand what President Trump's trade policy has been all about. And then we can move on to the thing that I've been working hardest on. I was just in the Roosevelt room with the Speaker of the House and the Majority Leader and Scott this week negotiating the tax bill, which is going to be the biggest tax cut ever. So there's a lot of positive stuff going on.
Can you also speak to just what I imagine are these favored nation clauses that are being put into these contracts or agreements around tariffs, meaning that the UK obviously wants certain things, wants to have better terms than others. You're going to have India, I imagine, to the extent they want to do a deal with the US, they're going to want to have better terms than China can get. How is that all going to work?
Well, I think that in the end, there's going to be a lot of similarity between the people that come to the table, make the concessions that the president wants, and then agree to be treated well, as the UK is being treated well right now. I think that what every country comes to the table with is a list of the things that they care the most about. And as I look at all the negotiations and how they're progressing, the one thing I can say is that that's a much harder thing for the EU to do than for everybody else. That's why we're moving so fast with so many countries, because at the EU, you got lots of different countries, so the countries disagree amongst themselves about what the priorities would be. But yeah, I'm very confident that in the end, there's going to be very similar treatment, but on different things, because different countries care about different things.
But Kevin, you said that you don't think these trade deals the tariffs are going to be as disruptive as a lot of Wall Street firms have predicted.
Correct.
Is that because you think that these tariffs are going to come down dramatically as trade deals are cleared in rapid fire?
Well, we'll see what happens, but I think the UK success happening so fast is a model of what everybody's shooting for. And the fact that even before Liberation Day, at the beginning of the year, negotiations were already ongoing with Jameson Greer and Howard Lutnick. And so there's a lot of progress made. And yeah, I think you're going to see a lot more deals like the UK deal in the coming weeks.
We're quoting you that these trade deals won't be as disruptive as some people, but I think you said and at least meant that the tariffs won't be as disruptive. The trade deals, I think everyone agrees, would be helpful if it brings down the high tariffs that had been proposed on April 2nd.
Well, it's really the non-tariff barrier, the huge positive shock of getting rid of these non-tariff barriers. That's the thing that I think is why markets are celebrating this deal, even though there's a 10% tariff.
Let's talk a little bit about taxes and where you think the progress is being made with that. We did just have Senate Majority Leader John Thune on set talking about some of these things. One of the things he pointed out is that he's dealing with different math in the Senate than the House Speaker is in the House, and that it's a little complicated to work the math because each of those bodies has something slightly different that they'd like to see. The leader himself said that, look, he'd prefer to see all these tax cuts that exist right now made permanent rather than maybe taking on some of the new promises that President Trump was laying out on the campaign trail. How do you score all of these different things for the economy? Well,
first, it's got to score to be a big positive for the economy, a much bigger positive for the economy even than the Tax Cuts and Jobs Act of 2017. But the way to think about what's going on is that it's really easy to understand, but in some sense, they're moving pieces. The reason it's easy to understand is that the president said throughout the campaign what his high priorities are for taxes, like no tax on tips, no tax on overtime, and so on. Interest-free auto loans. Those things are his priorities. Those are the things that he insists are going to be in the bill. And then the House and the Senate, they have some of their priorities are different, and they're working it out amongst themselves. And President Trump is clear that he has some things that absolutely red line have to be in the bill. And he also understands that in the end, as they work it out, there'll be things that one side or the other forces the other to do that not everybody agrees about. That won't necessarily be in the top 10 list of the president's priorities. But that's very collegially being discussed in the Roosevelt Room and up on the Hill with Scott Bessent, me, and the leader and the speaker. And we're meeting almost every week right now to make sure that it works out. We had a great meeting this week with an incredible amount of progress moving forward. I expect that you're going to hear from Jason Smith sometime today of what the schedule for the tax bill will be. And it'll probably be really accelerated given what I'm hearing.
You think the rate's going back to 39.6, Kevin, to make room for some of the other provisions from the president? The president said he'd be okay with it, but he's not. He was kind of like, sounded like
he's not thrilled. He's not thrilled about it. He understands the argument. It's one of the things that the Senate and the House has to work out. I think I saw what Senator Thune was saying on your show, and he felt like there might be some scenario where he would consider that, but no, it's not high on the president's list. He even tweeted about it this morning again.
The president also on Truth Social just said many trade deals are in the hopper. All of them, there it is. All of them good or even great ones. So he's.
It's true.
Okay, you might be listening.
I've seen him. It really is true. Yeah.
Okay, he might have been listening. Maybe he found out from you, from watching what you just said.
Sometimes he does.
Nice.
Yeah. No. All right.
Kevin, thank you very much.
Thanks, guys.
Okay, coming up next, we've got a lot more on.
All right, interesting. So, I mean, here's Hassett really doubling down on this idea of a framework for tariffs being presented by the UK deal, which is pretty interesting because it maintains that tariffs are probably here to stay. Here's Trade Desk again, up 14%. Watch the 67, 68 line today, see if it holds. Broadly, there should continue to be enthusiasm here as people are hopeful about tariffs, while at the same time we see very strong Q1 earnings. Basically, really the data doesn't really hit us until like we say, June, July. So I think that's what I've been saying and maintaining for a while here, that I think May could be pretty decent, especially if you got those trailing stops. So let's see what some of you got here. So goal is to have Tesla do manufacturing and factory jobs. Yep. Look, you could snap your fingers and say, go Howard Slutnik on us and tell us that, hey, well, it's fine. All the robots are going to do all the work for us tomorrow, but we're just not there. We don't have the robotic technology or infrastructure to do it tomorrow. So yes, I understand that sales pitch, but we have to get there. We have to incentivize education in America, trade schools in America. You have to incentivize factories in America to do that. You could do that one way by making it more punitive to manufacture somewhere else. But usually what you find is you encourage through tax initiatives that investment in America, which still then takes 3-4 years to build out. The tariffs apply now, which means you have this 3 or 4 year transition period of deadweight laws. But then you also have the risk that the next administration removes the tariffs right away, which then makes you uncompetitive again. So it's really a very undesirable roadmap to say, oh, I'm going to invest in America because of Donald Trump. Unless you're in a defense security based industry, national security based industry, that's a really tough argument to make. So. If we could manufacture Teslas with robots today, don't you think Elon would be manufacturing them with robots today? I think Optimus helps us move boxes right now, maybe. Okay, so in test mode, or we've had Figure AI robots working in BMWs or in a BMW facility, and I think they're up to either 1 or 2 robots. Doesn't sound like we're really getting too far yet with the humanoids. I mean, they will in the future. We're just not there. So UBI would have to be a thing if robots take over. Well, it depends, because if robots are manufacturing, that just like robotic arms exist, you might create more service jobs, and you don't necessarily need to do that. So it's not an easy job to get cheap labor technology isn't there yet. Right. So in the meantime, you kind of, you suffer the economic consequences of what tariffs cause. So let's see here. Tesla stockholder fantasies. Oh yeah. Eventually, Tesla bots. So let's see here. Amazon's new robot is cool. It's not humanoid. It has a face. Yeah, no, and don't get me wrong. I mean, Symbotic makes some great robots as well, and they're a public company. There are nice pallet mover robots. There's some really cool technology coming. I'm very, very excited about what's coming. The problem is you really screw up the economy in the meantime. Kevin needs to do a video on why tariffs are bad. Tariffs are retarded. Like I don't like using that word, but they really create damage, and people don't realize yet what that damage is going to look like, but it'll come. So somebody says, sell your house and buy all the Tesla you can. Yeah, you do that when Tesla's trading for $25. I have a play on Trade Desk because of you, so thank you. Awesome, congratulations. Yeah, I mean, I think we were pretty clear yesterday that, you know, fundamentally and technically, Trade Desk was trading at a low level yesterday. I actually think there's the potential that you could have just ignited sort of a beginning for Trade Desk. Now, there are risks for Trade Desk, right? Like the Netflix issue doesn't go away, but look at how much you've priced that issue in already. I mean, the stock fell 55% and, you know, now you're just retracing back up, you know, a little bit. You're still down, you know, 40-something%. So it is, Trade Desk is interesting, and I think the momentum could really take off. But we'll see. You know, what I would say is watch how it holds this 67, 68 line. That's what I would be looking at. So, okay. So, you know, Parfait here. Okay, first of all, I apologize for doing this to you, but it sounds very, very over basic when you just parrot the same narrative that every MAGA does, okay? If tariffs don't work, why do other countries use them? Okay, it's very stupid because first of all, we have to understand on a statistical and factual basis, the trade-weighted global average of tariffs was less than 2%. In other words, we had tariff rates on less than 2%. And part of that is to show up for your manufacturers and go, look, we're trying to do something. Part of it is to pretend you're protecting an industry, ag industry or whatever. It's politically driven. It's not economically driven. It's politically driven. But even if it was economically driven, we're talking about a 2% average across the world on a trade-weighted basis. Now, when we look at what we have now, we're looking at 5 to many multiples more than that imposed by Donald Trump. And Donald Trump is implying, who knows, maybe it's just a means to an end, that they are here to stay because they drive revenue. But they drive revenue in a very economically inefficient way because they create losses in the economy that can exceed the benefits of the taxes that you're collecting. And so again, without a crystal ball to give you the exact math, we can only look at history and see that we usually create more damage with significant tax increases that could take years to resolve than we create upsides in additional tariff revenue or tax revenue or whatever. So an economist vomits at the idea or even the notion that tariffs are remotely good. You'd be much better off just stimulating innovation or, you know, factories or whatever in the United States. So, you know, but, you know, whatever. Okay. All right. Parfait. I don't think you're getting it through your head. You are now in sort of like an aggressive, passive-aggressive way saying, I asked why they work for other countries. You're addressing the political narrative, not the other question. Sir, do you realize just because tariffs exist does not mean they work? Okay, we have not actually proven that tariffs work. In fact, we could probably prove that even the nominal tariffs that existed before Trump are bad. So no, we are not letting the idea that tariffs work slide. I am telling you why they exist and why it's hard to say that because they exist, they're good. That's dumb. That is a logically unproven argument. So this idea that just because tariffs existed before Trump at a nominal level means they work is factually unproven. Yeah. But the problem is, you know, and I hate politicians in general. And I think people think I'm like anti-Trump, just like when I, you know, say negative things about Biden. It's, oh, you're anti-Biden. Is I'm just trying to look at this from an economic lens. Okay. And then people, you know, put their MAGA hats on and then they parrot what their fearless leader says, and then what ultimately happens is you kind of let logic cloud your brain because, but my fearless leader said so good. Really? Where's the proof? Where is the study? Where is the research? Where is the economic proof that tariffs are good? It doesn't exist. You can't find it. You can't find anyone that says tariffs are good. It does not. There's no statistical proof that tariffs function. Find it for me, and then we can analyze it. So anyway. All right. So, what else do we have here? All right. So yeah, it sounds like we'll have to do. Maybe I'll make a video just fully breaking down, why tariffs are dumb. I don't know. I thought this was like an economic 101 principle, but like I don't think people remember. Their economics classes. I mean, I feel like tariffs are one of the first things you learn are very stupid, but that's all right. There's plenty of proof that tariffs don't work. There's endless proof that tariffs don't work. We'll make a video on it because otherwise it's just wasting time at this point. So what made you so against Trump? You were on his ass before. I analyzed policies. I wasn't on anybody's, I never endorsed a candidate. I analyzed policies. When somebody says we're going to have the most pro-business economy, that sounds great. When somebody says we're going to, raise tariffs on every country in the world at 10% or above, well, I say that's really stupid. So I don't know, maybe you have like this mindset in your brain that, but you said one thing is good, so you must think everything is good. That's dumb. Okay? It's very simple. One thing he said is good. Securing the border is good. Tariffs are bad. It's actually surprisingly simple when you break it down. Actually, Jeff, that's not true. The proof that protectionist tariffs work is that they don't get paid much. The reality is a lot of protectionist tariffs are there in spirit. Look, for example, at the 250% tariffs on, Canadian imports of our milk that Donald Trump always talks about. They don't get paid because they're set at a politically, painful level. But on an economic basis, they don't do anything. So in other words, they're worthless. But on the flip side, they're used to sell a political narrative and to get elections won. Oh, we're going to protect our factory. We're gonna blah, blah, blah. All right. So it's pretty interesting. Motivational Film says GME will help you out. Let's see what GME is up to, and then let's see what's going on in the world. All right. So let's go to GMizzle. Somebody in the chat says, Kevin, you a dick rider. Who's am I right? Because I'm pretty sure I'm making fun of everyone. But that's okay. Maybe you missed that. So what do we got here? GameStop. I mean, you've been range bound here for quite a while, haven't you? Yeah, look at that. I mean, certainly since November, you've been somewhat range bound on GME here. And then still nice recovery, though. This is a perfect setup for trailing stops on the Qs. Really fire. William D says, Kevin, you were nicer when you're drinking. I really don't care what anybody's opinion is. If you want my perspective, you can come here. If you don't want it, don't watch it. I don't care. So let's see. Okay, cool. Let me get what some of the doomers are saying this morning. Let's see here. Yes, there'll be a course member live stream and an alpha report. This is before that. Okay, let's see. Canadian 2-year yields fall after jobless rate. Yep, their jobless rate at 6.9, highest level since November 24. We're 2 years in a row now of rising. Though rate cut pricing may be overstating how far the Fed can go this year. Well, yeah, I mean, a lot of that's going to depend on inflation. Let me see what the probabilities are right now. So still pricing in a 50% chance of a cut by July. Still think that's somewhat unlikely. Let's see here. Okay. Stocks are banking too much on fragile trade optimism. Let's see here. U.S. stock market has gotten too optimistic about a de-escalation in the president's trade war, given that it stands to lose the most even if China tariffs are slashed this weekend. President Trump just said 80% tariffs on China seem right after Bloomberg reported the goal to reduce them below 60 as a first step in trade talks. So basically, what's happening is Donald Trump is basically negotiating against himself when it comes to China. That's because China is unwilling to negotiate with Trump at all. See, Donald Trump does not have a position at all when it comes to negotiating with China, because China's already made it very clear that they're not going to walk away from the principles of free trade. Now, who knows? They could be full of crap, right? They could be full of doo-doo, and they could just be saying that. Maybe that's their version of negotiating. But I find it very interesting, and it's something to pay attention to just data-wise, or I should say trade-wise. So, watch for that when it comes to China. Let's listen in over here for a moment.
Of what we can expect for earnings and the consumer and everything else.
When it comes to the economy, it may become a bit clearer in terms of the impacts.
Yes.
We've seen the numbers out of China in terms of exports to this country in April. They, as perhaps not unexpectedly, plunged. That said, they increased for China to much of the rest of the world. And then the UK deal, it's still 10%.
Yes.
And, I have spoken to a number of people this morning who are like, well, I don't know, what was that deal? What exactly does it all amount to? And I think JP Morgan, their desk on the trade deal, talking about it, grabbing the headlines, but looks limited in scope and, still leaves the UK worse off compared to the trading relationship prior to Liberation Day, less enthused by recent deals. But it does come back, guys, to this. It looks like we're going to have 10% at the very least with virtually everybody.
Right.
What will the impact of that be?
Yeah.
I don't know. And the market will try and figure that out at some point.
It's interesting because going into the April 2nd announcement, 10% across the board, I think, was sort of maybe the baseline of the way the market was pricing things. And the market was, 8% off of its high. We already had a pretty weak, let's say a few weeks before that. And so it's not as if it's blindsiding the market. We don't really know the impact. We really also bought ourselves a few months before the impact hits because of all the front loading. Inventories are full. Everyone has tried to do what they can. Companies aren't laying off in anticipation. And so you have this weird suspended animation moment in the economy. Earnings are finished up mostly. And we know what we're dealing with there in terms of a starting point. So I think it's tricky. The way the market is now raced back to just below its 200-day moving average, it feels like a little bit of a potential decision point.
NASDAQ got there.
NASDAQ 100 especially did touch it yesterday, and it's up 20% from the lows. And the other piece that I think is working in the market's favor in this last little bit is people re-risking and feeling like, okay, we have to participate. The lows are in, fine, the lows are in, but guess what? If you go back to the lows, it's going to hurt, even if you retest part of that. But the rest of the world rallying, new highs. Look at the ACWX, everything in the world besides the U.S. at a new high. Bitcoin at a new year-to-date, just about year-to-date high. So it's almost as if it's the reverse of what was going on for the past couple of years, where U.S. mega cap was kind of setting the pace and floating the rest of the world's risk assets. And this time, we're just kind of benefiting from the fact that they're holding in there.
Yeah, same with currencies, too. Asian crisis in reverse was the headline out of Reuters earlier in the week, especially when you look at Taiwan. Bitcoin, by the way, highest since January 31. Ether's up almost 30% for the week. Yeah. It's the best week in 3 years.
And I think it speaks to a couple things. One is that sort of muscle memory. This is now, kind of a high beta risk asset that you want to grab if the markets are feeling better. And two, it's the retail trade again. I mean, I keep coming back to that, and it's not really stalled. If you look at a lot of the data on the retail order flow, it's gotten very active again. And that's
wait.
both good and bad.
On the retail investor overall, they seem to have done a lot better than the professionals over this period. Not just Bitcoin, I'm talking about the market itself.
To this point,
many not having sold during all of that tumult, as opposed to, of course, so many of the hedge funds that drastically reduced their risk and did sell, and only to try to your point, try and catch up now to a certain extent.
Yeah.
That I do think a lot of institutions are really off sides right now. There's been a lot of sort of selling or short building, and lately they've had to do a lot of maybe rebuying and short covering.
And the Palantirs and the Teslas and the kind of story stocks. But I've spoken to so many wealth managers and investment advisors who are like, on April 7th, it was all to buy. The clients were like, they remember the pandemic experience. They remember it was a flash crash, basically, 35% down on a V bottom. And it seemed as if, maybe it's somewhat political, feeling like it's going to work out in the end because we have good things coming. Or maybe it's like one massive head fake and they were insufficiently attentive to risk. We just don't know.
Yeah.
Meantime, let's get more on the China side ahead of these talks in Geneva over the weekend. Turn to Eunice Yoon in Beijing. Eunice, interesting to see how the backdrop is getting painted there. The Journal's got a piece about China perhaps using rare earths as a bargaining chip as they go in.
Yep. Yeah, that's right. And it's really interesting seeing how each side is messaging as they posture ahead of these talks. From President Trump, he just posted on Truth Social moments ago and had said 80% tariff on China seems right, up to Scott B. Treasury Secretary Scott Bessent has previously said that the point of these talks is about de-escalation. So the indications that we're getting from the U.S. side is that the hope is that we would see a reduction or maybe a suspension of some of these tariffs. But on the Chinese side, the signaling has been that China will remain tough. And a lot of this messaging is for the Chinese audience. So this is meet China halfway, treat China as an equal in talks, and don't expect us really to go and to these talks and fall over. They're saying that if you try to coerce us, we will walk or refuse. And then on top of that, the point of the rare earths, the Chinese are saying that we can hit you back where it's really going to hurt. So the Commerce Ministry today announced a crackdown on rare earth smuggling and blaming it in part on foreign entities. And then the social media account that's linked to CCTV, which is very closely followed for its commentary on U.S.-China trade, has been mocking the U.S. for what they've described as rare earth shortages. So the expectations right now of anything meaningful coming out of these weekend talks really isn't there. But of course, people are hoping that we will see some negotiations down the line. And in fact, that's what Bessent has said, that this is really more of an initial discussion before we see some.
Yeah, and I think that's the thing is there's a lot of hope that we get a lot of really good deals or better deals or whatever before true economic damage. Now, hopefully we don't actually get real economic damage because layoffs are really painful and they'll lead to a horrible shock in the stock market. But we really want to be in a place where we can be optimistic. It's just hard to be optimistic when you have a president who says, oh, the baseline of tariffs is 10%. And, other countries will have higher tariffs than that. That is going to create disruptions that we'll probably feel for the next 2.5 years, on a simplified economic point of view. And the benefits of those won't be seen for, also probably 3-4 years for the point of onshoring manufacturing. So definitely a risky environment. But again, markets try to look forward and go, okay, well, maybe we can get, back to, some form of freer trade, through these trade deals. So far, that doesn't seem like it's going to happen. Midterms next year, China should wait. It's almost certain that China is going to drag out the negotiations up until at least when people start campaigning for midterms. I would totally agree with that. If you look at 2018, you'll actually see that, you've got a very long road ahead when it comes to negotiating with China. Yeah. Let's see here. Trump is going to do everything he can to keep the markets up. Well, that's the thesis of the Trump put. And you're not wrong. I think they respond to markets. And I think that's why Donald Trump yesterday, said, oh, buy stocks. We're going to go on a rocket ship. He's really trying to funnel that sort of like a second wind of energies, especially after the first time. Yeah, it's not untrue. Let's see what else we got going on here.
And making sure that China doesn't get treated badly. So I think at the end of the day, if the Chinese walk away with nothing, then, it really doesn't matter from a political standpoint. But for President Trump, I wonder if it would matter.
Hey, congrats, Joseph. I had to play on Tempest AI as well because of you. Sold a little early and missed out on some good profits, but still sold for profit. You're the man. Oh, thank you. Yeah, that was a good one too. Let's see here. So what else do we have here? Look at data bonds. What shelves are empty? Who said that shelves are empty right now? Are you watching too much CNN? There's a fear that we will see shortages in components, but businesses maintain inventory, right? So keep in mind, we're just right now at the 30-day anniversary of Liberation Day. So this idea that, what, I don't see any empty shelves yet. Well, no, duh. That would be an illogical thing to argue right now. You have to wait for shipments of certain goods and services, well, mostly goods, to stop. And then you have to wait for businesses to sell out of the inventory that they have. And then you suffer shortages. That is probably more of a July, August issue. It's probably somewhat overstated, but I'm less worried about empty shelves like COVID than I'm worried about the shock to the economy that we see in not just lower earnings at companies, but then a lower, CapEx spending from the vast majority of Americans. See, when people think of CapEx, we generally just think of AI, but we forget that, a vast majority of, I would say 50% plus of CapEx spending in America comes from small businesses. So small businesses really get whacked by these tariffs. Anyone who's a small business goods importer, despises these tariffs, as they should. So very interesting. So let's see here. Yeah, Paramamaji, you're not even listed as a course member here. I think you're smoking crack about what you're saying. I mean, maybe you could point it out to us, but I made it pretty clear over the last, 2 weeks that it looked like Trade Desk was starting to make a technical bottom. And then yesterday we were talking about it making a fundamental bottom before earnings. So I don't know, maybe you're just not paying attention. It's all recorded. You could literally go back and play the tape back from yesterday. It's not that hard. But I do think there's a chance Trade Desk could actually start that positive momentum cycle. So, which is very interesting. Let's see what else we have here. I think Trump is trying to fix the economy that COVID and shutdowns destroyed. What was wrong with the economy post-COVID? We had rolling recessions, but we had phenomenal job reports. We had economic growth. We had an AI boom. We had a lot of businesses returning, to the office work and sort of a normalization post-COVID. So I think we've been going through years of a normalization. What additionally is broken? Are you mad because prices are still high? I mean, maybe. I mean, that's fair. But what you're asking for then is deflation, which occurs during a recession. So I don't know. This sort of blanket, Trump is trying to fix the Biden economy. What was wrong with it? Let's talk about it. Then tell me something that was wrong with it. And I'm not here to, shill for Biden. I had plenty of poopy doopy to say about our boy Biden, mostly because I don't think he was really running the government anyway. By spending too much, aka socialism. So Thor's hammer, do you think Joe Biden providing $6 billion to TSMC to bring manufacturing to America was socialism? Do you think that the Inflation Reduction Act bringing inverter for the solar industry manufacturing to the United States was socialism, creating jobs in America? Is that the socialism you're talking about? I mean, immigration was a poop show. We could talk about that and agree on that. But, I don't know that I saw that much socialism. Maybe I'm missing it, but I didn't see socialism. We didn't get Bernie Sanders or AOC up, you know. Auto pen is not socialism. Like, let's be fair. We can both agree that auto pen is stupid and bad, but we could also be clear that auto pen is not socialism. You know? So let's see. Kevin, the best thing about you is that you call it straight down the middle, regardless of feelings. You know what I have to say. You're right. Thank you. I appreciate you saying that. Overhiring in the federal government, which led to better job reports to keep the government looking better than it was. Well, hold on a second. Are federal jobs not jobs? I would argue that they are jobs. So we're not making a jobs report look better than it was. We are actually creating jobs when the government hires people. Those are real jobs. Now, you may not like those jobs because you may be a proponent of smaller government. Okay, that's fine. I agree. I am also a proponent of smaller government. But to say that, oh, well, you know, those were fake jobs. No, they weren't. Those were real federal jobs. You may not have liked those federal jobs. You may wish to have a smaller government. Again, I agree with you. But to suggest that the jobs were not real is illogical. And all we try to do here is have logic. Fractional reserve banking is taxation. Now, well, that ain't going anywhere for a very long time. Both Republicans and Democrats are going to keep fractional reserve banking going for a very long time. The Ponzi will continue. One day the dollar will collapse. But guess what? None of us are going to have to worry about it. That's going to be hundos of years out. Yes. Let's see. The Baxton says, do you want to hire me as your full-time Rust player? That's actually pretty funny. You know, kind of like Elon has like a full-time gamer, you know, like gaming for him. I have a lot of respect for you, Kevin, says JL. The way these MAGA people turned on you is insane. I actually don't think that, well, first of all, thank you for saying that. But I don't think that, you know, I would say that the vast majority, 98% of people who support Donald Trump haven't turned on me. They actually look at what I say and go, I mean, that's logical. I think it's like the 2% really loud people, and they leave the most comments. Like there was one person who left a hate comment on X yesterday, and I'm like, this guy's just like got it out for me or something. So I looked at their profile, and I kid you not, out of their last like 100 posts, 25, 1 in 4 of their posts were hate comments on my posts. And I'm like, this person lives to shit on me. And I'm like, what a sad life. So he's either gay for me, which is fine. Like, I don't have anything wrong with somebody being gay. I'm not gay, but that doesn't mean it's wrong to be gay. I just say he's either gay for me or he's a bot. I don't know. I can't figure it out.
Financial issue about, we've seen de-dollarization of many of the emerging market central banks, and gold has taken a new place in the world as a currency, a currency that no politician can print. And it's been reinforced because these central banks have been using their gold reserves to buy, using their dollar reserves to buy gold, and the gold price has gone up, so their balance sheets have improved. And so it's an interesting time. And I think I always say to people, try and imagine what it will take for us to get the world back to 1999. That's a long way away from where we are today.
You mean in terms of global debt?
In terms of global peace, of a global economic community, of supply chain efficiencies, every aspect of our everyday life was a lot better then than it is today. We're in a chaotic phase of, the global economy.
Well, what's your view? I'm curious then, especially given what you're seeing from your end customers in terms of the impact of tariffs as well on whatever you're providing to them and they're selling.
So I think that, look, we've got to manage it. We've used to managing dynamic situations in the mining industry. You wake up every day to a crisis, and there's another few in the afternoon after that.
All right, this is boring. I thought this would be a little bit more interesting. Let's try the Doomberg. Doomers!
Goods early in the year, because before tariffs hit, we know businesses did that, that's for sure. So there was a bit of that behavior. So people are definitely, again, I think consumers have been pretty healthy, but has also been kind of preparing for what happens if tariffs come in.
President Williams, I mean, you've done such, really significant work and research on neutral rates. How important is it actually in all this uncertainty to have that in mind?
Well, I would say to me, again, I've spent a lot of my life studying this, so I am going to say it's important. It's important as a way of thinking about what's a normal interest rate. When we think about where our interest rate is today, you want to compare it to something that's normal. So I think having this idea of a long-run neutral interest rate is an important thing to kind of have in mind. But in terms of my meeting to meeting thinking about what's the right setting of interest rates, that's not what we're thinking about, or at least I'm thinking about. It's what you're thinking about then is what's happening with employment, inflation, and the risks to achieving our goals. So it's something I think is conceptually important to have in the back of your mind, but it's not the thing saying what you need to do on a given day.
I mean, does it not give you that, in the more immediate term, a good benchmark and, compared to what interest rates are? Or does it fluctuate too much?
Yeah, it's uncertain. My estimates from our model that I've worked on have actually been relatively constant over the last year and a half at around 0.75% for a real interest rate. Short-term real interest rate. So it doesn't seem to be fluctuating a lot now, but there's some uncertainty about it. So yes, when you ask me, do I think of is monetary policy restrictive? I think of that in different ways. I do think it's modestly restrictive now, mainly because I'm looking at how the economy is performing, but also in the back of my mind is some notion of real interest rates are above kind of typical estimates of long-run estimates of the neutral rate.
Even if President Trump doesn't do, he has a lot of thoughts on monetary policy. He was again talking about it last night. Even if he doesn't do anything with the chair, removes him or anything like that, does it make the job of Jay Powell's successor a lot harder to make sure that there's, central bank independence is intact?
Well, I do think central bank independence is very important. I think it's important because history shows it leads to better outcomes, lower inflation, more stable inflation. We've seen that around the world in central banks in many, many countries that have most countries have independent central banks. For me, I've been in the Fed for over 30 years. I come to work every day just focus on our mission, maximum employment, price stability, work with people who are choosing to work at the Federal Reserve, bring all of their knowledge and experience to help us do that, along with our other responsibilities. So we're nonpartisan, we're not political. We just do our job as well as we can, and kind of what's happening outside in the political world is not what I'm thinking about.
But do you feel internal pressure, or again, not so much? Doesn't actually impact. Does the central bank have to try harder to make sure that everybody understands that you're independent, or again, does it not factor?
No, I don't. I think it's the same as again throughout my career.
There's no independence question here. This is pretty boring. Let's see. Fed starts to think about cutting jobs. Yeah. Okay. So I get your question here. Your question basically is, hey, if we're going to get lower CPI reads and basically tariff inflation doesn't really show up, isn't the Fed likely to cut because of, they're concerned about jobs? The problem is they said they don't want to be preemptive. And so that means we really, unfortunately, have to sit around and wait for them to actually start seeing damage. And that, again, makes the Fed slow to react, which is unideal, but it also makes the damage the economy has to incur, unfortunately, a little larger. Let's keep listening here for a moment.
And they've got maybe people they're taking care of. They've got jobs. They've got a lot of responsibilities. I wouldn't expect people to spend a lot of time thinking about the FOMC meeting and the statements and the minutes from the meeting. I would hope that if we do our job really well, we're taking the concerns about inflation of the future, concerns about is the Fed going to be there to do their job off the table so that people, whether your families or businesses, can focus on the things that's really important for them to get right in their lives, and that our job is to make them not have to worry as much about economic and price instabilities. And so I feel like, in a way, a sign of success is that people are not, kind of so focused in their everyday lives about what we're doing. But we just have to, that commitment just has to show through in our actions and hopefully the outcomes that we're able to achieve.
Somebody in the chat here says the Fed has done a terrible job. what has the Fed done poorly? I mean, other than, their slow response after COVID, what did they do wrong after that, or even before that?
Francine Lacroix coming out of Reykjavik, Iceland.
Yeah, all right, they're done with that conversation. I mean, look, I'm all for like clowning on like the suits or whatever, but I'm curious. Like maybe you could add some insight there, some color there, because I don't know. Anyway, the Alpha report's out for those of you looking for the morning Alpha report, but you probably already know that because you already got the notification through the Meet Kevin app. See, we actually have a section in the Meet Kevin app where course members can easily get access to the Alpha report, which is kind of awesome. We're going to keep building out that Alpha report, which is pretty awesome. So anyway, yeah. So let's see here. Fed is always late, but it isn't their job to act on speculation, right? And I think that's partially one of the problems that they face is sort of the, the nature of their job, right? What do we want their job to be? To react or to be proactive? Well, I mean, ideally to keep the economy as stable as possible, right? So whatever that means. So let's see here. But I actually think, Powell's doing the best he can. So didn't I post? I'm pretty sure I posted the text version today. Oh, did it go through as rich text today? Oh, let's see here. Their bad job is just their job. Allowing inflation and keeping maximum jobs just taxation. Well, I don't think the Fed was ever allowing inflation. The Fed rapidly responded to inflation. It's just things take time to roll over. It takes 12 months at least to roll over. I'm a business owner that supports Trump's plan, but I'm not a MAGA nut. I think there are a lot of people in your boat who say like, hey, I'm not like, going to suck on everything that's given to me. But I think there are a lot of business owners who are like, hey, let's just keep our fingers crossed that hopefully things can do well over time. So very interesting. Okay, what else? You can also support the president without being a Republican. That's also true. But also, this idea about having another negative CPI print, tariffs are probably going to increase inflation reads for a short quarter. I don't think we'll see it for a very long time, but it's definitely quite possible. So not ideal. Anyway, aren't they reacting to speculation because of unknown tariffs? Well, no. I mean, what they're really doing is they're saying we're just going to wait until the data tells us which direction to go because they don't want to speculate, which I think is the fair approach. And that's unfortunately what's going to keep them late because, my thesis is that we're going to see a rapid slowdown in the economy, which will lead to prices falling, not rising. Yeah, Samuel says, send me a shout out live, brother. What up, Samuel? Your boy Meet Kevin got a 181 bowling yesterday. Actually, I put that on X and Instagram. Follow me there if you want at Real Meet Kevin on X and Meet Kevin on IG. But there's a little picture of Max and I, and then obviously post other things too. But yeah, I beat Jack's all-time high score by like 3 points. So we're on a race to see who can get to 200 first. Hey, let's do the bell together here. We'll get to the course member live stream shortly after.
Over 10 years, to do worse, you would have had to have bought the ultra short triple Qs.
Yeah. So it's tough playing public venture moonshot lottery tickets. Let's get the opening bell this morning in the CNBC real-time exchange. And the big board, it is Barrick. Just talked to Mark Bristow a moment ago.
Okay, the Fed did not look through hot inflation prints they were getting in 2022. The Fed was raising rates as of March of 2022 in response to rising inflation. The Fed was hoping that inflation would be transitory in 2021 when inflation reads were actually still low. So, keep that in mind. Okay, so what's going on at the start of the day here? The Qs just popped a little bit, 55 bipidudes. We're going to jump on over to the course member live stream in a moment, but already signaled for some line movements in the Alpha report this morning. We'll see if how those play out. Again, those of you who are part of the Meet Kevin membership, you've got your Alpha report. But I'm watching Tesla here. I think you've got maybe another % or so to extend on Tesla potentially. So we'll watch this pretty closely. Got Palantir falling a little bit at the open. You've got Goog. What do we have yesterday? How did we end up yesterday? Yesterday, mostly flat yesterday on Goog. Netflix feels like it's topping out a little bit, eh? Look at that. Yeah, here we go. I think you could get up another buck over here on Tesla. Let's see. Let's see if we end up breaking through over there. Apple. When's Apple going to break 200? Come on, baby. Missed the sound effects. Oh, we got the sound effects. Even though I'm a licensed financial, not that one though. Where is it? This gained the lead. Yeah, I need to get all of them back though. I could do that. I could set up all the rest of them. I think this is my favorite. So let's see. Ooh, look at Microsoft slowly crawling out of the hole over here. That's interesting. You know, what's that going to set up for? Because this looks like a converging uptrend, which is actually potentially bearish. But this is only on the 1 hour, right? And so after their earnings, you had this rocket ship here. I mean, giving some of that back wouldn't be too terribly much of a surprise. Trade desk keeps going. Let's go. Ignite the momentum, baby. Ignite the momentum. And Q's still holding on. Come on, there we go. 295 on Tess. It's right there. Come on, baby. Anyway, so let's see here. Let's take another look at some of the comments. When does the coupon code expire? The next price increase will be the 16th. So it's next Friday on the Meet Kevin membership. After next Friday, the pricing will be higher. You know, what I always encourage people to do is just try, if you want, the 30 or 3-month option. And then if you don't like the Alpha reports or the course lives or whatever, you can cancel, Like, it doesn't cost you that much to try it and then see if you can make some money, Can't guarantee it. So that's why we just say, just give it a try. And a lot of folks trying it out, which is very exciting. A lot of folks sticking around too. Thanks for keeping it 100, Kevin. These MAGA hats take offense to anything that isn't praising Trump. That is true. The extreme, like 2%. Yeah, I agree with you. So, look at that. 296 breaking through. That's pretty impressive, Tesla. If a recession hits, what can banks do to my HELOC? Well, the most they usually can do, and it depends on the terms of your loan, of course, but the most they usually can do is freeze the outstanding balance of your credit. They can't, like accelerate your payment usually. So the worst usually is you're just not going to be able to access more capital. Okay, but anyway, Tesla, very nice here on the 295 line, continues. I think near term, you still have 320 as a target, mind you. And then the trade desk momentum continues even more. Let's go. So anyway, cool. I am now, you want me to put a SPY? Okay. All right. Cursor AI is what my employees are raging about. It's the best AI programmer. Oh, that's awesome. Cursor. Who's going to buy Cursor? It's going to be interesting. Anyway, all right. We're heading on over to the course member live stream. I'm going to grab a cup of coffee and we'll see you there in about a minute. Thanks so much for being here and open live. If you like it, leave a like. If you don't like it, F off. Bye.